Wealth is created through putting your cash to work for you, whether it's a franchise, whether it's real estate, whether you're an investor in someone else's business, whether you're lending it out and receiving a return on that money. Real money is made by cycling your money and getting it to make money for you while you go out and earn your active income and then living below your means, right? Like compounding that money over time. And franchises are an excellent way to do it.
How do you find the will to fight back against a world that wants to keep you sedated, average, and stuck in place? Join us for the tools and strategies you need to create a life of abundance, discipline, and high achievement. This is the Tactical Empire with Jeff Smith.
Welcome to another edition of the Tactical Empire. I am joined today by Sean. What's up, brother? How are you?
Not much. You got around to shaving your head and I did not. So I really got to put it on my list of to-dos this week. But yeah, busy schedule. So that got put on the back burner.
My neck hair was halfway down my back. So that was the driving force behind the shaving head. What's going on, man? How are you?
I'm good, man. And we had a really good Easter weekend, ready to rock. Big changes happening. Not changes, just adding a big project to our life that we're super excited about. It's funny that the timing came in with the episode you dropped with Anthony from Franchise Sidekick. So me and my wife are investing in our first franchise. So we're super excited about that. It's definitely not a super passive income stream. This is going to be something that, she's involved in. We're hiring some people right now to really run it. And, Jeff, I don't know if you ever felt this way running some of your early businesses, but, you obviously make so many mistakes in running your business. And the downside to being successful while you run, the downside to being successful while you make mistakes is like sometimes there's changes that you wish you could make. But I'm also as a young entrepreneur, I was adamant about not breaking something that was successful for a long time. And I just would catch myself saying, like, if I could just have a clean slate and start from scratch. And now this is really going to put that statement to the test because it is a clean slate. It is, and maybe this is the topic for today. Because if you did not listen to the episode with Anthony, like that was awesome. That was awesome. And I was already down the rabbit hole of entertaining a franchise. But man, when you start diving down and actually get into conversation with these franchises, the right one, they have everything buttoned up, man. Like what took me 8 to 10 years to figure out starting a business from scratch, these other franchises that they have it, the entire back end system. And now it's like, why didn't anyone else tell me about this early on? And yeah, you need capital for the most part, or you need to be credit worthy for someone to give you the capital for it. But no one told me like, hey, if you're willing to work your tail off, there's an easier way to figure out all the like back end shitty things that you're going to be spending a lot of money on to figure out over the next 5 to 8 years. So why didn't anyone ever tell me that, Jeff? Let's talk about, let's talk about franchising. Let's talk about, when I was an early entrepreneur, it was like, nah, like I don't have the money. So I'd rather be safe and not invest all this money. I can start from scratch and do it the slow way. And now it's like, now I'm like, I've seen behind the curtain and I'm like, oh, that's why. That's why.
Yeah. I think it's built. I think the model of franchises is brilliant. I've been open to it for a long time, but I think it's especially helpful for people like you and I that are visionaries more so than like integrators and the tactical side of things. Cause like, I think that's what we lack. Whereas like, if you can put the back end support system in and then be powerful in sales and marketing and enjoy building culture and things like that, then you can really thrive in a franchise environment. Just because it does give you speed and it gives you leverage. I mean, I think a lot of people, you and I both run gyms for a long time, and there's couple sides of the fence regarding marketing in that space. And part of what a franchise does is, I mean, depending on which one you get plugged in with, they do your marketing. So you talk about starting an organic business with a marketing component. A lot of people don't even do that. And so it's a powerful thing. I mean, they feed you leads. They do a lot of different things depending on who you get involved with. And then they spend a lot of money to build a powerful brand on top of yours that you get to supposedly reap the benefits for, and you should at some point. So
one of
I'm excited for you guys, man. I think it's a fucking tremendous opportunity. I think it's a cool way to dip your toe in and put some support in place too. For you, if you don't want to go full bore, like for you, you're not willing to probably spend 40 hours a week on oversight of this particular venture because it's not really your baby necessarily. And so it's a good situation as opposed to like where a lot of couples go into business and they are doing it together and they run both. They wear all the hats together. So this brings in a third party kind of support system too.
Yeah, not only the franchise support system, the team that they have in regards to the actual open development of the franchise, but we are hiring a leader, a GM, so to speak, not so to speak, that's going to be their title, general manager. Whereas like I didn't want to touch that in my gym because like I can't hand this off. I can't hand the keys off to someone else because like I said, it was my baby. But when you walk down and go to 2 days worth of meetings, with the franchisor and the founders and the investors and the development team, and they're like, no, you need a GM from day one, and this is why. It's like, yeah, man, someone should have slapped me across the face and had it. But I work with a guy in the Tactical Empire, one-on-one mentorship with one of our men, and he just opened a franchise less than a month ago. So it's been about 3 weeks, going on 3 weeks now. And talk about them controlling the marketing. They hired the third-party vendor that the franchisor recommended, and we just had our call last week. I was like, pull up all your marketing and sales metrics so we can just make sure that this money's money well spent. And very quickly, I found out that it was. I mean, 500 leads in 21 days.
Wow.
Like, okay,
that's awesome.
500 leads in 21 days. Now, the interesting thing is like, just kind of like when we mentored gym owners, they're like, but moving forward, like we got to sustain the leads. I'm like, dude, you just had 500 leads. Not all of those leads are paying members. Is that correct? No, they're not paying. They have not subscribed for a membership at this facility. And I'm like, don't look forward for the leads that are coming. You need to continue to work the list on the back end. Cause I don't know about I'd get on calls with gym owners and they'd be like, my leads are drying up. And I'd pull up their sales metrics and be like, no, you have 400 leads from, 6 months ago. And you just reached out to them one time and passed on. Like a lead is a lead until they tell you heck no and they unsubscribe. So it's cool to take the lessons from other, business ventures and now show people how to look at these metrics. But the really cool thing on that call was like, oh, that franchise had their stuff together. They had the right KPIs and the right metrics. And so I'm excited for it, man. When you looked at franchise, what would you be looking at? What would you be dipping your toe in? I know mine's going to be a little bit more active, but if this one pays off, then it's like, how do we talk about transferring capital from one asset to another. So if this one pays off, it's like, let's move that capital and maybe start another franchise that definitely won't be as needed with our eyeballs and maybe a little bit of our sweat equity in it. What about you?
Yeah. I'm more into looking at home services businesses, plumbing, HVAC. I like fencing. Fencing's another one that a guy in the Tactical Empire just started. He bought 4 regions right off the bat. He was profitable in like 60 days. So it was a really good deal. But the home services business, I talked to you about pest control. That's another one that, I mean, Anthony's buying one right now. And I just think that those are you got to look for segments of the market that are still going to be around once AI like runs everybody out of business. Right. And home services is going to be a need forever. I truly believe that. And there's going to be needs to do those type of things, fix HVAC systems, stuff like that. While people's perception is it's harder to find workers in those environments, but also like it's harder to find help. Like as a homeowner, it's harder to find those help. So what's that do? It's simple supply and demand, right? You drive up your prices, it drives up value. And so For me, I'm not really into the brick and mortar stuff. I like the scalability of being able to add units and add regions. And in the home services businesses, you can do that, which with as little as like a warehouse facility. So, like, I mean, let's take pest control for example. All you do is if you want to, you make $100,000 with one truck or something, right? Net. Like, if I want to make $500,000, I just go get 5 fucking trucks, right? And like, the other thing that was mentioned in that particular podcast is the scalability is there. So like, while it may cost you $250,000 to penetrate the market, like it's not 250 more $1,000 to get the second unit up and running. It may be $50,000. So your first unit is where your heavy hard costs are. And then you may be able just to add regions through your franchise at 50K a pop. So like one region, maybe 250,000 to get the market penetration, but then two regions might only be 300,000 and three regions might be 350, right? And you see how the scalability goes there. I mean, I like him. I like him a lot. The more we talk about them, the more I'm kind of like bullish on them as investments outside of real estate. I think you and I have spoken about like you have more levers to pull in an actual business to generate capital, right? Like if you take it from 15% profitability to 30% profitability, you're changing the game quite a bit. And as opposed to like a long-term rental, which I own a bunch of as well, I can bump the rents periodically, but like that doesn't even guarantee me increased net because I've got insurance and taxes rising in kind oftentimes. And so like in the long-term rental game, we're raising the rents just to keep our profitability flat, essentially most of the time. Like, okay, well, we just got a 9% increase in taxes. And so we've got to figure out how to offset that and mitigate that loss of revenue, if you will. So, I mean, I like a balance of businesses in your portfolio to go along with these other long-term assets too.
This is interesting. I want to make sure we speak to everyone that listens to Tactical Empire. It's like, hey, I'm not a business owner, so this isn't relevant to me. And like where my mind kind of went when you were talking there, because I'm thinking of like the plumbers that I know in my life and the electricians, and how a lot of them are small local mom and pop shops, but then they hire all these other guys. And I don't want to screw over any business owners, but some of the W-2 earners, whether you're trying to spin off and do your own thing or keep your W-2 job. We talk about keeping your W-2 job and then just putting your capital elsewhere. I think the franchise model would be really good for that second to third tier plumber or electrician. That this is why, just because you're not the owner of a company, if you're a better steward of money, in the long run, you're going to win. Because you could be a second or third tier employee of a company or just a high income earner of a company and be a steward of money and then deploy that capital in a like kind franchise if you wanted your own thing. But you're not going to start from the bottom, because when you invest in these franchises, they have the systems, they have the marketing plan, they have the CRMs that you probably don't know anything about because you've been in the field turning wrenches. So I think this is a very good model. And I have worked with other people that are high income earners, executives at companies, whatever. They make six figures and they've been good stewards of money, and they just want to deploy that into the real estate. I love that strategy, right, for long term. But I want to acknowledge what Jeff just said. Like, depending on the type of real estate, like, you're not going to be able to move the top line and bottom line number as much as what you could move if it was a business. This is something you said on a Wednesday call with our inner circle, the guys, and you were like, if you guys have access to a business or own a business or can buy a franchise, it might've been on the franchise call actually. And you were like, you can move the bottom line way farther, way faster than on an individual real estate property or even a small portfolio. So I would just want to reiterate that and maybe connect it from a different angle for some of the listeners that might be not a business quote owner.
Yeah. Yeah. If I was still in the corporate world, I would 100% look at a franchise as my way to bridge the gap out. Just because of all the components of the structure and back end that they put in. And like, if you think of it as like just replacing your salary instead of like, it's the first thing I do has got to be a home run. I think it's a no brainer. Like, okay, you make 150 grand, you go out and you find one of these franchises that you see the runway for 150 grand. And then you start the thing on the side with some of your money from your W-2 and you bridge the gap and start it, and start doing it on the side, make 40 the first year, 80 the next year, and then you're ready for the leap whenever you want, right?
Well, that's where my mind went. I was like, even if they pull 50, that's a 33% increase in family income. So,
Sure.
you may not have to send your spouse back to work, right? Like just if you're trying to supplement, that's the way to go. So, but I just had a call actually an hour ago with the vendor they use for financing. And this vendor has access to conventional loan products and SBA loan products. So let's talk about that for a second. Is you don't even have to use your own money. So let's just, again, make people's minds blow up and be like, look, we are huge proponents of OPM. We are huge proponents of using other people's money. And so now in today's market, right, we're looking at 10 to 12% interest rates with some of these loans that they discuss with me. The SBA one is variable. So if we are looking at 3 rate reductions over the next 12 months, they said it's about 10.5% right now. So you mentor me. If they're going to front 80% with the SBA loan, it would be the entire investment, not just piecemealing. The conventional loan would be just build out, just equipment, but the SBA loan would be for all of it. And they're like, because the franchise is an early adopter, in the early stages, they might force you to have 30% capital injections at the front end, but they said they might be able to get you down to 20 because our financial standing is good. Talk to me, mentor me about the decision to finance as much as possible of the franchise. So talk to the people.
You want to finance as much as you possibly can, because you have to go in with the mentality that your business needs to be a standalone business. Like you don't need to be feeding it. Like, so you shouldn't be writing checks from the bank account of Sean and Kate Ryder to feed a business. Like, unless, I mean, obviously, I think most of us have given loans to our business, but they need to be seen as that, like loans, and they need to be paid back in the proper manner. And so the other thing that most people don't know is that SBA loans you working capital too. And so like they'll lend you capital reserves. So if you go get $1 million from them, they're going to say you have to keep $250,000 in cash. And here it is. They're going to lend it to you. And they don't tell you what you have to do with it necessarily. They suggest what you have to do with it, but they set you up for success from that standpoint on like, here's 6 months of runway to like make yourself successful. So it's not just loaning on the brick and mortar or the equipment or anything like that. They give you actual capital. And if you're not an idiot with it, you can invest it wisely and get it moving and obviously increase the profitability of the business. Should you take capital if available? Yes, you should. The lifeblood of a business is cash. And so even if you don't think you need a penny on the way in, open a line of credit, at least. If you're not going to take it and put it in your account, okay, that's fine. I understand. But at least have access to that liquidity. And at the beginning, you can't have enough liquidity. Yeah. And so, yeah, I mean, I would get access to everything at 10%. I mean, ultimately, you figure your business is probably going to be profitable at a rate of, it depends on the industry, obviously, but you're looking for 15, 25% profitability in most businesses. Some are much higher, some are a little thinner than that. But you're going to be able to outpace that debt service and the interest that you're going to pay on it. And the peace of mind that gives you, though, in your first couple years is exponentially worth it with regards to like getting through those cash crunches that you're inevitably going to face in the first couple years. And so you can finance that however you want. You could do it yourself, or you could do it through the SBA. I would suggest doing it through the SBA. And then if, like I tell you guys this all the time, as far as like looking at your business or your investment as its own business, a standalone business, because then you can evaluate its profitability, its return on investment, its return on equity. That's everything that's sitting there. You can evaluate it, as opposed to just like not managing the finances feeding it yourself. Like if it costs you $1 million to get into this franchise, if you guys write a check for $1 million and you have no cash, how long is it going to take you to get that $1 million back? As opposed to if you have $1 million sitting in your bank account, but you go open $1 million business and you use the SBA's $800,000 because they're loaning you 80% in your example, and you keep $800,000 of your cash, you put 200 in that, then you can go open 5 more fucking businesses before you run out of money. And like, what leverage does that create for you? And how quickly does that create velocity for you? That's where people get tripped up all the time in real estate. They go out and they spend all their cash getting into a couple properties, and then it starts to trickle back. And they're like, what do I do now? Like, I can't be full-time in real estate. I just bought 3 houses and they only cash flow $1,200 a month total. $1,200 isn't doing anything. Right. And so it's the same in business. It's just on a different scale. And you have to kind of evaluate the business or the loans and the money a little differently.
Well, you know what I'm going to do.
Yeah, sure.
I'm going to take every dollar that someone else is willing to give me.
Yep.
And you said something there. I agree with everything you said. I think some other people are going to need a few more layers pulled back, and it goes back to personal finance. So you said something there where like getting that money from someone else is going to be peace of mind. And I would have extended that sentence to it gives you peace of mind if you are coming at it from a non-traditional personal finance background. Because what other people are going to say is that debt is debt and debt is bad, and owing people $300,000 is a bad position to be in at 10%. Oh my God, I'm paying 10%. There, 300,000 is going to turn into $500,000 over 10 years. Like what? I got 300,000 in the bank. I might as well use it. And it's like, y'all, we talk about this. Yes, they're giving you 300,000, but they're giving you access to capital that you may or may not have. And what allows you to sleep well at night? Well, I don't know about you. It's not the number on my liability sheet. It's making sure that I can live the life I want to live and be able to, afford an emergency or pay for the things that I want to do with my family. So the cash in the bank is what allows me to sleep well at night.
Sure.
Someone else giving me their money, their interest rate is the cost of money. We've talked about this. It's the cost of money. They deserve to earn a rate on that money. And they're giving me time. I'm borrowing speed by getting their money and investing in a franchise. But what are they giving me the ability? They're allowing me to buy time. I believe in me. I believe in my mindset. I believe in my skill set. I believe in the people that we're going to hire. I believe in the business. I believe in the product. So I believe that over a 10-year runway, I'll be able to pay off that debt. Because what am I focusing on? I'm not focusing on the large nut. I'm focusing on the smaller monthly nut. I'm focusing on the debt service. So when I put $10 of someone else's money into my business and they're asking me to pay them $1 every month for it, that $10 creates $3 a month. They gave me 10, they're asking me for 1, and I'm netting 2. That's the math that I care about on a 30-day cycle. I'm not worried about the debt number. I'm worried about the debt service. But I'm not even, just to reiterate to people, this is how you can expand your brain. I'm not losing sleep over the debt service because that's focusing on the wrong damn thing even. I'm focusing on growing a damn business. I'm focused on growing the top line. I'm focused on leading the team. I'm focused on providing good service. That's it. You do that and you will be fine. But when you're hung up on debt is debt and all debt is bad, you will still be a 62-year-old that's struggling to pay for eggs because of inflation, because you've focused on the wrong thing for 30 years. So we appreciate you listening to this podcast more than one episode because you're hearing a recurring theme here. Be a steward of money. Have access to your cash, but if someone's willing to give you theirs, take it.
Yep. I'm going to totally derail the podcast and probably get us banned from YouTube for this week. But what I wanted to talk about, though, when you were saying that, dude, let's talk about this Trump thing. Like legit. The Mar-a-Lago thing. No, it feeds back into what you're talking about. It feeds right back into what you're talking about. The Mar-a-Lago thing, he just got fined $500 million, right? The most fascinating thing about that whole bullshit case, and a politician was on, I don't know where they were from, California or something, and they said that they were exposing Trump for lying and saying he wasn't actually a billionaire because he couldn't get $500 million of cash. If you look, he actually got $500 million of cash together, and I was like, holy fucking shit! That whole debacle has a million twists and turns. That him being able to get and bring in a duffel bag $500 million of cash was the most impressive thing about that whole shit show I've ever seen. Because he's worth like $8 billion, right? Yeah. But you don't get to be a billionaire by not understanding how to leverage your money. Most of these guys don't have more than a couple $1 million, $10 million in their actual liquid accounts. So when that motherfucker came up with $500 million, I was like, holy shit. And what an idiot our politician has to be like, he's not a billionaire because he can't go to his Wells Fargo and get a fucking Brinks truck of $1 billion.
Yeah.
Like, that just goes to show you how delusional the people that we're electing are. Like, they don't fucking have a third grade education when it comes to fucking finances.
It's
sorry.
Crazy.
There we go. We can get back on track if you want.
Well, that's traditional personal finance. That's traditional personal finance. If you can't use cash to pay for it, then you can't afford it. That, ladies and gentlemen, this is why so many people are not in a good financial spot right now. Now, I don't know the ins and outs of the entire situation, but this is also like where they, what did they say? They said that he borrowed the money based on him creating a net worth statement, and the net worth statement had goodwill, which is the value of the brand. And they're like, you overstated your brand, and that's why the bank gave you the money. But the bank willingly gave him the money, and he paid the loan back.
Yeah.
I'm assuming this is the same story. So at the end of the day, two parties, let's talk about this. In the United States, two parties did due diligence on each other. They exchanged money. Well, again, I'm not like, I don't study all this shit, but like, let's just talk about the principles of the situation, regardless of names involved. In the United States, person A and entity A exchanged due diligence information. They came to an agreement and they transferred money.
Mm-hmm.
Person A went and did whatever with it, and they paid back entity A in terms with the agreement.
Yep.
And our government entities are saying that they overstated something. Now, at the end of the day, y'all, when I hear things like that, regardless of the person involved, I say, how can that, why do we not want to attack people like this? Because how can that be turned on me as an individual citizen of the United States? And I thought about this. My short-term rental portfolio, let's talk about one of my properties, the A-frame in Wardensville, West Virginia. That A-frame I bought for $530,000. That A-frame produces $100,000 of rental income, top line revenue. I have expenses and it creates a profit. That entity is an LLC, so it is a business backed with an asset that it owns. That asset has a liability against it. If someone came to me and said, Sean, your property is now worth $600,000. I will pay you $600,000 for this $530,000 asset that you bought. Will you take the $600,000? My answer is no, because that asset creates $100,000 of money that flows into a business that I own. So to me, I'm not going to sell based on the value of the asset. I'm going to sell based on the value of the business and the cash flow that the business provides. So if someone came and said, okay, I'll give you $750,000 for that asset and the attached LLC or whatever, however it would be broken out, I would maybe think about it. Let's just hypothetically say I say yes. So I take that $750,000, I pay off my debt, and I net the difference, $250,000. Now the government can come in and tell me that that was not right because I overvalued the value of my cash flowing business. That's
well, I think that's what people need to recognize more than anything is like regardless of the parties at hand with regards to this particular situation that we were talking about, like this happens every day on scale. So take it all the way down to like your fucking Kohl's credit card and you go apply for a Kohl's credit card, they ask you how much you make. You tell them how much you make. Their job is to determine your credit worthiness. So like if they tell me that I have a credit line of $500 after I tell them how much I make, and then you go get a credit card and you make less than me, but they give you $500,000 of credit line, and then you're at fault for that. So like it's really just a law of culpability. Like where does the responsibility lie? And it's in the underwriters to determine your credit worthiness. That and plus there's a third party component to this that has no business in the transaction. Like if I come to you and say, will you loan me money? And you say, sure, how much do you want? It's an arrangement between us. Then I pay you back. Then someone else comes in and says, no, fuck that, Jeff. That's illegal that you did that loan, right? Yep. That's essentially what's happening. And so it should fucking concern everybody because, quite frankly, because like this could happen at scale to any single one of us at any time. Now, maybe not your people that live out of cash envelopes, but like if you've taken a loan for a car, a loan for a house, any of this type of stuff, you could be in some serious shit, obviously. So it's concerning from that standpoint. But again, I totally fucking derailed the whole podcast. So here we go.
Well, it's okay because people be upset with you, but I want to talk to the people that put cash in envelopes. Your 16-year-old daughter that goes across the street to babysit for a night and gets paid $50, and you didn't call that on your taxes or her taxes. Well, don't be talking shit on the people that have a couple more zeros after their name because you're doing the same shit, just not at that scale. But when they go after the people at the top, this is trickle down economics, ladies and gentlemen. They had now set a precedent on what they're willing to say and do on what is okay or not okay for two individuals to create an agreement with each other.
Yeah. I mean, it's that whole situation's wild, but, to get back on track,
franchises.
Yeah. No, I think
franchises and financing.
Well, I mean, leverage is really important. I got derailed by how much cash was in his bank account. And like, I was just fucking impressed by that. And, because most people don't keep that type of liquidity. It goes to show you just truly how wealthy he fucking is. And like, because like most of my wealth, you came to get me and you said, Jeff, get together fucking whatever, $1 million in cash. It would take me a while because I don't sit on cash like that, right? I would have to liquidate. I would have to move money around. I would have to take lines of credit on different things. And so like to get $1 million of cash would take me a few weeks because of all the shit where my money is tied up. Right. And like that in and of itself, but that goes to show that is how wealth is created. Wealth is created through putting your cash to work for you, whether it's a franchise, whether it's real estate, whether you're an investor in someone else's business, whether you're lending it out and receiving a return on that money. The real money is made by cycling your money and getting it to make money for you while you go out and earn your active income and then living below your means, right? Like compounding that money over time. And so and franchises are an excellent way to do it. Obviously, you're finding that out right now. You're going to go leverage the bank's money to buy yourself an asset that is then going to pay back its loan on itself. And then you're going to be able to, once the loan is paid, then you can increase your net profit beyond that even, and your take home beyond that.
So let's say the three main things are we're going to borrow other people's money, the bank or whoever. We're going to buy an asset. We like real estate and businesses. Starting a business from scratch or buying a franchise now is a topic of discussion over the past 2 weeks. The three main things about that is the entity, the business, the asset will service your debt for you. Ideally, it puts money in your pocket right now, unlike other investment assets, vehicles.
Yep.
And over time, arguably, this is what really just I should have known this, but it just made sense. I said it on the last podcast, and I didn't know you interviewed a franchise guy. And then the episode dropped the next day, and you guys said it on the podcast. I want to reiterate this. The asset is servicing the debt, number one. The asset is creating income for you now, number two. Number three, it's creating an appreciable, valuable asset that can be sold later. And arguably the franchise model you'll get done right, followed the plan, arguably will have a higher premium price on that because it's a name brand. It's not Joe Schmo's side hustle business. It is blank national regional brand. And there are people within these franchise ecosystems. I'm finding out in the one that we're getting into, there's a dude in there that has the rights to 9 locations, and he has signed an agreement to open 12 in Arizona. He's got 9 on the East Coast, and he's opening 12 in Arizona over the coming years. So he's created a portfolio of 21 of these suckers, young dude. And at some point he will exit, and he's going to be able to just sell that entire portfolio. And so it's not only putting money in his pocket today, but that's his retirement plan, man. Whereas everyone else is just shoving money into Wall Street at 8%.
I will tell you, depending on your time horizon that you want to be in these businesses, the other reason, it's a supply and demand thing when you go to sell it and exit, and you have more buyers in a franchise model, bar none. Like
there's people above you that want to move fast, and they don't have the time to put in 10 years to build 21 units. They just want to buy yours.
Yes, exactly. And I mean, you'll have, if you create a solid business, a profitable business with a solid EBITDA, you're going to have buyers no matter what. But you could argue that you're going to have a bigger pool of buyers in a franchise setting than you will being like a mom and pop, right? And so like there's a lot of powerful reasons to hop into it, because I mean, if you want to go create 3 successful ones, roll them up and sell them, and like that's your model, I think I would argue that you can do it faster in a franchise than you could on your own.
Sure.
Because like if you went out and tried to create Sean's fitness studio or Sean's fucking pest control, you're going to have a harder time rolling up 3 of Sean's pest control than you would if you went into Hart's pest control or whatever the fuck's local to you. Like, and because everybody knows Hart's pest control or whatever. So if you have 3 successful ones and you show this NOI, net operating income out the back end, that's impressive, your buyers are going to be all over that shit. And they know that your systems are in place. There's not a lot of there's not as much gray area as in a lot of businesses. Because if you go to Sean's pest control that he created from scratch, his SOPs might be written in a notebook.
Yeah. Right.
So yeah,
go ahead. We're finding out from without disclosing too much information, a gentleman in the inner circle, we might be finding out that the best asset to purchase is a franchise owned by a mom and pop that is a national brand, 50 plus years old, and the mom and pop just want to exit because they're ready to retire. And so you get a really good sale price on an established, strong national brand franchise for basically zero money out of pocket, and boom, you're netting some nice income for you. So guys, there's so many ways that this cake can be sliced, but you want to eat the cake and the icing too.
But I think one of the most impressive things and eye-opening things about franchises is that, like, if you truly hate your fucking job, like if you have a job, like a 9-to-5, like do not hesitate to look into franchising. Even if you don't have any money or you think you don't have any money, there's ways to do this. And it provides the support system to, like, in a lot of cases, make you successful and with the same output and work ethic that you're putting in at work potentially. And so, like I said, I mean, I think I started this conversation by saying if I was in the corporate world still, I would look for this as a bridge, like 100%, man. And now that I'm not in the corporate world and now I'm more in an investor phase of my life, I'm looking at these as an investor. Like, how can I stack 5 of these things, make them successful, and then roll them out, or partner with somebody? You and I have discussed this on the back end, partner with somebody that wants to operate. And then maybe we roll up 5 or 10 of them and then exit or just cash the checks.
Yeah.
Ultimately, I'm just interested in in creating cash flow on a regular basis and increasing the money that's coming in now, ultimately.
Yeah, I got nothing else to say. The only thing that I didn't slip in there was like, people are so willing to work 20 to 30 years hard on someone else's business, but you're not willing to take a little bit of your capital and borrow someone else's capital to take a little bit of a risk on yours to work. You just said, just work your ass off and follow the plan. And you're probably going to be heading generally in the right direction. So Jeff, that's all I wanted to give to the people on this topic.
Well, I mean, that's what the inner circle is all about. 2 to 7 years to freedom. And like how you're going to skin that cat is up to you. We're going to give you all the tools and insight on how to do it. I mean, we're watching it daily. We got a guy retiring in 2 days from his W-2 job. I think 2 days. It's this week. This week's his final week for sure. Yep. And so like you got the other guy that's taking down that franchise that's going to fucking add $250,000 of take home income for himself. Like fell into his lap, but it was because he was open to the opportunity because of the conversation that we had.
Yep.
And so like this is possible for anybody, any of you listening. So hit us up if you want to hang out, change your life. Get a hold of us. We're in the Tactical Empire community on Facebook. It's free. Like us and subscribe us on YouTube. It's the Tactical Empire podcast. And hit us up if you have any questions for Sean and I, or you need any support on anything. Thanks, guys. Have a great week.